Hi, Vieira with stockmarketlive.tv. Well, today we are going to address one of our strong buy opportunities in the stock market. A company, American, we upgraded from strong sell directly to strong buy. And I'm going to explain which company is, and bear in mind instructions were given to you, every single subscriber ahead of earnings to reduce significantly the size of the short position, and after earnings announcement to close the remaining position and to reverse to the long side. So the company that I'm referring to is precisely this one here, the chart, RackSpace Hosting. RackSpace Hosting, it was considered a hyper bubble, a commodity, downgraded to strong sell, and you have the case study online on the website at stockmarketlive.tv. In 2015, last year, we reiterated the strong sell rating at $55 an half in 2015, betting in the collapse of RackSpace Hosting. The collapse, the crash materialized, my vision, and ahead of earnings, I recommended to close 80%, as you can see on the chart here. I recommend to close 80% of the short position at $19.89. And after the company announced earnings, I recommended to close the remaining 20%, reversing to long side. So I have a strong buy rating in RackSpace Hosting going forward in 2016, and the price $15.60. Today shares they closed at $21.16, therefore it is already a very good profit, and it is a confirmation of our vision, all right? Bear in mind that while the blue line that you have on the chart remains as support, we have or maintain a strong buy rating in RackSpace Hosting. Also bear in mind that this chart that you have on the screen, it is precisely the same chart that has been shared with you as an investor in RackSpace Hosting for the past years. We never changed the chart, and this is very important. We never changed the chart. So we, as soon as, and you just have to look at the chart, as soon as the share price traded down to the blue line, I recommended to close the remaining short position, in fact a bit higher, and reversing to the long side. So today and going forward, we have a strong buy rating in RackSpace Hosting for a simple reason, is that I don't visualize, quite frankly, at least at this point, that RackSpace Hosting shares are going down to zero. All right? I think that there is an intrinsic value in the company, and therefore I was not going to remain short RackSpace Hosting down to zero or to single digits. Even because, as you might understand, if shares for some reason they would continue moving lower, since there is an intrinsic value in RackSpace Hosting as a company, it will be very risky to remain short and, for example, thereafter to have the announcement of a buyout. So my upgrade from strong sell to strong buy in RackSpace Hosting. To finalize, I have to say that I don't visualize a new bull market in shares of RackSpace Hosting, in the sense that shares are going to multi-year highs, all right? My upgrade to strong buy is based on, in the first place, the methodology described here in detail in the past years, and it can be in fact applied in many other examples. In first place, you profit the most from the crash, and you only then invest in a company, in particular, for example, the case of RackSpace Hosting, after you made the most on the short side. And this is an investment principle that I've been defending since the very beginning for more than 25 years. And the call that I made in RackSpace Hosting, it is precisely the same call recorded also when Freeport McMoran traded down to $3.69 when I recommended to close short positions. At that point, RackSpace hosting was trading at $19.89. We reduced 80% of the short position. We already expected eventually shares to move lower, but that was not a reason to add to the short side. On the contrary, to close on weakness and reverse into the long side. In the case of Freeport McMoran, you already know the story. Shares, they rallied 100% on my call, closing entirely a multi-year short position at $3.69, also upgrading shares at that point. And meanwhile, Freeport McMoran rallied 100% or more than, in fact, 100% to $7.58. In this case, the same principle. Obviously, I find difficult that you are going to see a rally of 100% or plus within 1 week or a couple of weeks. Since that to happen, it is necessary RackSpace hosting in the future to execute. Okay, earnings in the future, the rest of 2016, RackSpace hosting has to execute. Nevertheless, I repeat, I don't visualize shares, for example, to go up to $40 or $50. I would consider exaggerated. Other reason to upgrade RackSpace hosting is based on the intrinsic value of the company, which in my opinion is not single digits, and the risk of remaining short. Obviously, at some point you could see a buyout, and we don't want that to happen. In that case, we will prefer to have a long position. And again, the same principle as explained in the case of Freeport McMoran. That is to say, even if shares they continue moving lower, there was no risk whatsoever, since in the past years we made the most betting in the crash, the collapse of RackSpace hosting, which we consider obviously nevertheless speculative investment. All right, so you only invest in speculative companies or stocks after you made the most on the short side. That was precisely the case with Freeport McMoran or RackSpace hosting. Thank you and good luck going forward investing in RackSpace hosting. Thank you.